But the aviation space is really surging in the last couple of days. D Martin of Martin Consulting will join in to discuss the aviation sector as traffic has picked up and government has now allowed a higher capacity. More on that in a bit.
The aviation space, because here stocks are going to be in focus as the government has allowed capacity for airlines to rise to 85% from 72.5%. Further, air traffic for the month of August has also looked fairly encouraging with a 36% increase over the previous month. Martin, member of Royal Aeronautical Society, founder and CEO of Martin Consulting, is with us. Thanks for joining in, Mark. So just your thoughts. How do you expect, this to translate into perhaps better revenues and eventually better margins for aviation companies, given that there are more and more people taking to the skies?
Good morning, and thanks for having me, Sonia. I think the interesting part is the release of 85% capacity, and this backed by the surge in demand of air travel. You've locked up people for the last 2 years, and now they're back. They want to fly. They want to bring back normalcy with themselves. Companies want to bring back certain amount of normalcy. All that travel locked and contained over the last 2 years is back, and that's going to help our airlines do fairly well. I think the obvious usual suspects from Indigo, SpiceJet, Vistara, AirAsia, Go Air, I think most of these companies would see a renewed demand. But we must also understand that although 85% capacity is what it is, and that's one of the reasons why occupancy is about 90+%. But once you bring up a complete 100% capacity deployment, we should see occupancy levels come between 70 to 75. Now, on the flip side, I think a lot of the financial impact and liabilities that have been accumulated over the last 2 years will have to be recovered. So we're not going to see any aggressive price wars or price battles here, but we will see that market-driven price trend. So the consumer will command prices, and I think that's a positive thing. This is a good period for at least the airline business per se. But I think on the operating cost side, we must be mindful that the price of jet fuel has gone up. The general cost of operating in aviation is up by at least 15% from last year. So those are words of caution, but I think collectively it's far more progressive and positive.
Okay, far more progressive and positive. Mark, hi, good morning. So at the end of the day, right, although occupancies are picking up, demand has gone up, these are companies that are sitting on huge losses. Indigo, for example, reported 3,000 crores of losses in just one quarter gone by. Is there anything that is being done right now in order to sort of, reduce those losses quarter on quarter? On the operational front, do you see any kind of respite at all?
Morning. Yes, I do. I think airlines have done whatever best they could with amortizing costs to some degree. You're basically written off and you've transferred the losses for the last 2 years over the next 5 years. So that should give airlines some level of breather. The ECGLS support really isn't much. I think 250 CR is not even enough to cover salaries, but the big support comes from lessors, where the major lessor liability has helped soften the blow on operating expenses. Now, airlines do have cash operating costs, but I think the fixed costs that airlines have to pay will keep coming and biting them back. So it is certainly a tough time. They will have to restructure. But on the flip side, I think once the world is free of COVID, I think that the surge in air traffic and transport is going to be exponential, like what we're seeing in the US. Flights really booked over to Hawaii, and I think that trend will come over here because it'll be back to normal and everybody wants to travel. So I think that's going to be a unique driver. Also in 24 months, hopefully we should see Akasa Air in the air. And in addition, Jet Airways should make a return. So with new capacity, with more aircraft, in 24 months, we're predicting 24 to 36 months for total stability with the airline business in India.
Okay, so you're talking about total stability in 24 to 36 months. I want you to just give us one last comment on the stocks. I know you generally don't, but these stocks are really surging day after day, big moves coming in there. Is the risk reward still positive for investors to buy into aviation companies?
We're not going to talk about stocks, but what I can say is that this is a good time to stay invested. I think mostly some of the better performing airlines in India should pay rich dividends as we go on and as we continue for the next at least 12 months. So and this will give a tremendous amount of boost to the business as well, collectively. I do see improved earnings. I certainly do see better margins, but operating costs will still be a whammy. And I think that's going to be a major concern. So I truly hope the government does something to help improve that profit wafer margin by at least lowering GST, lowering VAT, lowering compliances and the tax element. But collectively, I'd probably say stay invested, hold on to those stocks. And the airline business needs you at this moment. So let's see how that goes. And I'd like to be more progressive and optimistic and positive.
Okay, all right. Thanks very much, Mark, for joining in with that.